Not only is foreign trade slumping, foreign investment is slumping as well. In fact, we've seen negative foreign investment growth since 2012. We saw substantial foreign investment growth start at the bottom in the 1990s and into the 2000s, but foreign investment has barely grown at all over the past decade. And most of that growth came right after the financial crisis. In recent years, there's been no growth at all. For me, this is a sure sign of a lack of business confidence, a lack of investor confidence. That's one part of it. And the other part is, again, localization. This trend towards bringing your production facilities or your service centers closer to your consumers. And we're seeing a lot of that in North America. We're seeing that increasingly in Europe and in parts of Asia. And that is reducing as well foreign investment growth around the world. Talked about the lack of business investor confidence. Another big factor in this slowdown in foreign investment has been changes in monetary policies over the last 5 or 6 years. Early in the decade, a lot of money was flowing into emerging markets. That stopped in about 2014 with changes in monetary policy here in the US and in other major economies. And that has not really changed much since then. Another big factor are lower commodity prices. Simply put, commodity prices are relatively low. You look at the price of oil, for example, over the past year. You think about this for a second. Last year, we had attacks on Saudi oil installations. We almost had a war with the US and Iran. And yet what happened to the price of oil? It's still trending downwards. That shows you just how much downwards pressure there is on the price of oil right now. A lot of that has to do with the fact that the US is now producing so much oil. The US is now the largest oil producer in the world by some margin, a margin that continues to grow. So supplies are not in jeopardy. And at the same time, we're seeing oil demand be relatively weak in recent years, not just in terms of relatively low economic growth, but the fact that we're now seeing a trend away from oil and towards renewables. Many barriers have been enacted by many countries in recent years, claiming that certain industries are strategic and therefore barred to foreign investors. This is another trade and investment barrier that's been going up in recent years. And again, the issues of localization and automation, which I mentioned earlier. So we see one of the 3 key pillars of economic growth, trade and investment, has been relatively weak in recent years. And in fact, the outlook for trade and investment at the moment is quite uncertain. So that's one of the 3 main pillars of economic growth, and it doesn't look that strong at the moment. Another key pillar, of course, is demographics. Population growth drives economic growth. It's that simple. You have more workers, you have more consumers. It sounds quite simple. But what's been happening in recent years and, in fact, in recent decades? Well, birth rates have been falling tremendously. The replacement rate, if you have no immigration or emigration, if 2.1 babies are born per, 100 women, I think, your population holds steady. Well, almost no major economy in the world today has a birth rate in excess of 2.1. In fact, many have birth rates far below that. China, their birth rate fell to just 1.0 last year. It's the lowest in modern China. We've seen declines here in the United States. We've seen declines everywhere. So the birth rate is falling. It has been falling. And what does that mean? That means that there's less, the working age population is growing slower. You have more elderly people as a percentage of your population. You have less young people. And now you have a working age population which is starting to decline in many key economies. Here are some examples of that. 2 very well-known examples are Japan and Germany. That chart shows the working age population in red and the non-working age population in blue. And look at what's happened in Japan. Japan is perhaps the most extreme case in the world, but the working age population in Japan has declined by more than 10 million people in the last 20 years. And going forward over the next 50 years, it's going to decline by another 30 million people. Basically, it's going to be cut in half. Japan has one of the lowest birth rates in the world. It has almost no immigration. So Japan, one of the most successful economies in the world right up until the early 1990s, has been hit incredibly hard by the fact that its working age and consuming age population has been in decline for some time. And Japan's economy, since 1992, has grown at less than 1% per year. Many of you can remember back in the late 1980s or the beginning of the 1990s, Japan's economy was the envy of the world. It was growing 7 or 8%. Its per capita wealth levels were significantly higher than the United States at that point. Well, it has slumped tremendously over the past 3 decades, and the main reason for that is the fact simply it's disappearing. Japan's population shrinks by a person every minute. So it's shrinking rapidly, and the population shrinking. Germany is another example. Now, Germany had that influx of immigration in 2015, 2016, but nevertheless has one of the lowest birth rates in the world, and we're going to see a significant decline in the working age population there. Now, how does that look in the two big economies? Well, in the United States, even though our birth rate has fallen and immigration levels have suddenly fallen, we're still projected to have a working age population that grows a little bit. Now, we're not seeing much growth, and historically, this is not growth at all. And many of you know that when you're trying to find workers for your businesses and you realize there's nobody out there, it's very hard to fill positions. It is the number one issue that I hear from our clients now in the United States and in many other parts of the world is we just cannot find employees anymore. It's becoming incredibly difficult. So imagine in the United States where our working age population is still growing and we can't find them here, what it's like in many other economies. And perhaps the most interesting one is China. Now, as you know, in China, they've had a one-child policy in place since the 1970s. That was lifted a couple of years ago, but nevertheless, the birth rate in China continues to fall. The working age population in China is peaking right now. It's peaking at about 920 million people. And over the coming decades, it's going to fall tremendously. And this is one of the major issues facing the global economy going forward. Here, this economy accounts for more than almost 1/3 of global economic growth, China. And in the coming decades, its population, its working age population, is going to fall dramatically and very quickly. I mean, we're talking about a loss of 100 million working age people in the next 20 years. That is substantial. And this is a country that doesn't have the social welfare systems and the retirement systems that wealthier countries have in place. So how is China going to deal with the fact that its tax-paying base is going to be shrinking while its retirement age population is going to be soaring? It's going to be a major issue going forward. And just to verify what the impact has been, look at those unemployment rates. Can you imagine, I mean, who could imagine that the US would have an unemployment rate of 3.5% right now, lowest rate since 1969. Japan's unemployment rate just around 2%. Germany is just above 3%. All these major economies with unemployment rates that are well below what is considered to be a healthy level. I mean, most economists would suggest that a healthy unemployment rate is somewhere around 5%. And we're all well below that. Many other economies, it would be the same. This is a direct product of these demographic changes we've been talking about. Even here in Ohio, the unemployment rate, 4.2%. That's one of the lowest levels we've ever seen in this state. And again, it's reflected in the inability of companies to find enough employees. So while the working age population is declining, and it's going to decline rapidly in many markets, the over 65 population is soaring. Look what's happened in Japan over the last 20 years. The over 65 population has grown by 14 million, whereas the working age population at the same time declined by over 10 million. So a tremendous increase in the over 65 population. Same thing in Germany, it's growing here in the United States, and most substantially in China. This is the one growth market that I've mentioned in many previous presentations that is guaranteed to be there in the years ahead. It's the over 65 population. Products and services aimed at this market are going to have a fast-growing market available to them. Look at in China, the numbers are staggering. I mean, we're talking about a doubling of the over 65 population over the next 20 years. That is remarkable. And it's something that is going to transform the global economy in the decades ahead.